Happy evening, one and all present here. On behalf of SIRC of ICAI, I welcome Chairman of SIRC, CA Panaraj sir, and today's speaker, CA Vivek Krishna Govind sir, and all our members who are virtually present here for today's web series on bank branch audit using Excel, verification of advances, and audit documentation. Before proceeding further, I request our chairman to render his welcome address.
Good evening and thank you, Vice Chairperson Geeta ji, and esteemed speaker for the day, Vivek Krishna Govind sir. Good evening, and good evening all the attendees. And I am very thrilled to be part of this program today because this is the first of its kind after my chairmanship, after assuming office as chairmanship in the last 10 days, that is after 16th of February. This is the first series of program on bank audits, bank branch audits. So the registration was overwhelming, and it has crossed 1,000. That is 1,080 or so. And every day, this is the third day of that series on bank branch audit, second, third, and fourth. And this is today is the last day of 3 hours. So 3 hours each. It is totally 9 hours CPE. And I thank you very much for giving such an encouragement in such a program, which was what's called advertised very late, but still you could make it. Thank you for that. And I very warmly welcome the speaker for the day, the erudite CA Vivek Krishna Govind, to speak on bank audit using Excel, verification of advances, and audit documentation. This is one of the very important topics because technology is taking its own speed. It's moving on, and we have to gear up ourselves and use Excel, be accurate, save time. Accuracy and saving time both is possible with this Excel, and that intricacies of all these things will be dealt with by the speaker for the day. A warm welcome to you, sir. And I also welcome all the delegates for this third day's program. There was, because of technical snag, there was slight delay in starting the technical session. Please bear with us and enjoy the learning for the day. Thank you very much and warm welcome to you all. Over to you, Geeta Madam, for introduction of the speaker.
It's my proud privilege to introduce today's speaker, Vivek Krishna Govind sir. As we have done today's bank branch audit series on the theoretical part of the bank branch audit. Now, today is a session, as the chairman sir said, it is on practical aspect. That is on using Excel, how to verify the advances and audit documentation. So it's a very important session for today's scenario. So I take this privilege to introduce CA Vivek Govind sir. He is a senior partner of Measures Verma and Verma Chartered Accountants with more than 24 years of experience in various areas of audit, assurance services, and management consultancy. And he qualified CA with ICAI award for the highest marks from Kerala. Also qualified CISA, and he held positions of President of Kerala Management Association in 2017 and 18. He served as the chairman of the Ernakulam branch of ICAI for the year 2010 and 11, served as the chairman of Young Indians Association, and he represented India at G20 Summit at Istanbul in 2015. He served as a president of Rotary Club of Cochin Downtown and as assistant governor of District 3201. Serving on the Kerala State Council of Confederation of Indian Industry, and was a convener of the CII Inspiration Leadership Summit. He served as National Council member of All India Management Association for the period 2017 to 2019. And he served as a visiting faculty and associated with various premier management schools in Kerala and presented papers at several national conferences organized by ICAI. With this very brief introduction, now I hand over the session to our esteemed speaker, CE Vivek Krishna Govind, sir. So over to you, sir.
Thank you. Thank you so much. Chairman Panaraj sir, Geeta madam, and most distinguished delegates present here. At the outset, it's a great honor and privilege for me to be here and to be a part of this event. As the chairman has said, this is the first set of programs which are being organized under his chairmanship. And indeed, it's an honor. And I'm sure that in the year ahead, now that the world has opened up, there will be very many events and occasions for all of us to get together in large numbers and enjoy the bonding and friendship which we've all, badly missed during 2 years of having to be detained at home. And now here we are, nevertheless, ensuring that we are still doing relevant programs in a hybrid manner. I think this is the best part of it. We are having the best of both worlds, while we will have, large festival-like events for us to get together and have physical programs. We will also continue to organize, programs like this, wherein, some of us can, continue to interact and be, part of the sessions, despite being in different geographical spaces. So, congratulations for that. I think many of the organizations have stopped online sessions, but I'm so happy that ICAI is still continuing to organize these, because I think in the world ahead, it is important that we still continue to, have a mix of a good mix of both physical and online events. Now, my focus today is largely going to be, because when I discuss the topic, the focus will largely be on verification of advances, because in this three-part series, one major component which needs to be covered is the verification of advances. So that is going to be the focus here. And while on that, in what manner we can use technology, and to the extent possible, we can discuss it. There are very serious limitations, as you know, when you try to talk about technology in an online session. This probably we can plan a classroom style session wherein we use audit tools and CAT and Excel, etc. That it will be more effective. Certainly, I'm sure all of us would agree that a more hands-on session will be needed as a follow-up probably to this. This will be an initial session where the focus largely, because as all of us know, 80 to 90% of the time and risk involved is related to the area of advances. And while on that, the topic allotted to me, I've also been asked to talk on audit planning and audit documentation as well. So some part of documentation I know was already covered in an earlier session, so I'll try my best to ensure that there is no duplication. But personally, I think once we speak about and once we have a discussion on advances, that itself is going to take up a large chunk of time, because I'll try my best to try and go from as practical a perspective as possible, because issues are what I'd like to bring to the table, the kind of the things which we would see when we walk into a branch, rather than talking about the prudential norms. I know that many more seminars and sessions are lined up, so I'm told that there will be sessions on prudential norms, and so hence that has been kept out of my purview of this discussion. But here the focus will largely be probably first 20-25 minutes. I will be talking about the documentation and the planning side, and from that angle, and then the next probably an hour and a half or so, I will be trying and talking about issues, practical issues, and some form of discussion if we can have, or some queries which you can throw, or even some suggestions, because at the end of the day, this is a discussion platform for us. Some of us here would have seen interesting issues, and if you can share some of that in the chat, or if we can, if somebody would like to convey your thoughts also, that would be nice, so that even in an online platform, as far as interaction as possible, I think would make it a two-way process as we move forward. So this is typically how the structure would be, and we can take some questions depending on the availability of time once we are done. So with this opening remarks, let me just share my slides, and then I'll get started with. I hope my slide is visible to all of you. Can somebody please confirm if the slide is visible, please? Yeah, thank you so much. So I'll move forward quickly on this. So this is largely what I'll be looking at over the course of the next couple of hours. the planning, documentation, practical issues, some of the important recent circulars, some of the concerns, and then briefly touch on the technology side of it. And for some of you here, for the sake of looking at it, if you line by line how Excel needs to be looked at, there is a very nice session that you will see on the SIRC portal itself by our professional friend Sharan Kumar, which I think is almost 4 hours over a 2-part that has been done. So I think that is the kind of time we would need if we are to talk about using of Excel, and that has to necessarily be more interactive than in this format. So I would I would recommend, and I would request those of you who are here to specifically if you're looking at Excel as an outcome from the session, my request and advice would be that you take a look at that video, because that is only talking about that. So it's a 4-hour session only on that. Here, since in a couple of hours I've been asked to talk on multiple topics, I will be focusing more on the practical issues connected to advances, because when I spoke to some of the senior members who are part of the organizing team, I was told that this is where, because we are handling a large number of central audits, and so this is where our experience is there. And I was told that best takeaways for the delegates would be if I focus more on the advanced verification part of it. So I'll be focusing and spending more time on that rather than the technology part of it, which I will only be briefly covering here. Now, moving on to the first and the very, very important part. So when I talk about audit planning and documentation being the first area assigned to me, let me spend the next 20 odd minutes on that. See, this is where we sometimes go wrong, and this is where we sometimes find, that our entire process of audit is not going according to a structure. It's because we don't really go about planning an audit well. Now, bank audit and a branch audit specifically is very different from any of the other audits. Now, the major difference here is the time that is available for us, and the fact that most of the time we are going into an alien territory, a place which we don't know, which we are not familiar with. We go there, and in 4 or 5 days flat, we are expected to do everything, complete, issue the report, close, and leave. Whereas in almost all the other assignments which we do, one is there is a familiarity. Most of our clients are continuing clients. 90% of our clientele, probably only 10% new clients we will add every year. So 90% of our clients are old clients. So we have the past files, we have our past experience, earlier issues, we have familiarity with the client, we know the audit, we know the organization, we know everything about it. It's all there, especially in the hands of the partner and senior managers, etc. Everything is there in the fingertips. But here it's a completely different, we are just told a few days before the audit commences as to where are we, what is assigned to us or what is allotted to us, be it public sector or private sector for that matter. Few branches would be given to us. Next year, it could be a totally different set of branches in all probability. So we don't have that familiarity. We have no idea. We may know how to do a bank audit, but as far as the specific place, location, or even the bank for that matter, where we are going, it could be a first time visit for most of us. And normally for a first time client, what do? We spend time on knowledge of the business, we spend time with the clients, we do an initial study, we do risk assessment, thereafter we do vouching, and then we have multiple stages of review, supervision, finalization. So for any new client, which is of a fairly large scale, we end up spending at least 3-4 weeks in the first year that we do. Thereafter, probably we may optimize, but at least that. Sometimes larger clients a lot more. This is the bare minimum that we would spend. But here, straight alien territory, we walk in, 4 days, 5 days flat. We are, I'm sorry, presentation discontinued. This is not visible to some of you. I saw a message pop up. Can you please confirm if this presentation is visible? Visible, thanks. Okay, I just saw a message which popped up on my screen. All right, thank you so much. So moving on to this, planning is very critical and very, very important. Every audit planning is important, but the bank personally, let me tell you, unless we do our planning really well, unless we actually spend our time at least a week before our team is sent for the audit, please ensure that we do a thorough, events and activities like this. ICAI, SICASA organizes a lot of programs. So ensure that we send our team for all these programs, let them all be up to date, let them all be aware of all the changes. And they also need to be told from a specific bank perspective also, a few things we should try and do before we actually go there. I'm just stressing on this because this is where many a time we end up goofing up right at the beginning, because we get our planning wrong and we just walk into the branch on April 3rd or April 4th, or we go there and suddenly on day one we realize that there's so much of data, the system we don't understand, we are not familiar, and then within 2 days time the pressure will start. Sir, zonal office is calling, regional office is calling, head office is calling, when will you finish, when will you sign? Some people want it on 5th, some people want it on 6th. This kind of impossible to complete kind of deadlines are sometimes thrust upon us, and many a time we end up having to do that also because of a lot of stress and pressure which comes from the top. So that's where let me stress on the importance of planning. So start with a guidance note. Every year it's getting revised. This year also I was also fortunate to be a part of the team wherein a lot of discussions. It was very interesting how ICAI goes about the process of revision of guidance note itself. Is a good learning for us, where it's split into various areas, and though there are no new circulars or changes, nevertheless every year there is a lot of mind application by various senior professionals, and so it's important our guidance note is up to date. So please ensure that our team carries it, our team studies it, our team knows what to look at from a guidance note perspective. Any area of doubt, we need to fall back on the guidance note. Pick up all the items which are the preliminary data requirements and send it out early. If possible, even pay a visit if the branch is within your vicinity. May not be practical if the branch is somewhere far away. It may not be, or in another state and all that. It may not always be practical, but if it is reasonably within your city or nearabouts or in the same state, it would definitely be worthwhile if we can pay a visit in March and get just convey what our preliminary data requirements are. Every bank has a very unique closing instruction manual. Unlike in the case of regular audits we do, there is no such thing unless it's PSUs or some of these large MNCs which have structured manuals and all that. But otherwise, most of the clients don't have any of these things. But banks, they have what is called a closing instruction manual, which is given to from prepared at the head office, usually in concurrence and discussion with the central auditors. And so it's important that we also, as branch auditors, have a copy of that, read it, and sometimes even it would make sense to compare that with some of the other practices followed by some other banks. And in case your professional brother or sister has a better, some of the banks have better instruct closing manuals. If you can pick up something from there as part of your audit planning, that would be great. List down what are the list of audit deliverables, certifications. Certificates, very, very, very important. And sometimes what happens is that it's not given the importance it deserves. They're always busy trying to focus is always on advances. I will come to that. Advances is most important. I'm by no means diluting the importance of that, but we must also understand there's a great deal of risk we take when it comes to certificates and certifications that we do. And in certificates, as we all know, it's true and correct. It's not even a true and fair that we are saying. And sometimes the kind of certificates of which the banks ask us to certify are impossible to verify. Let me tell you, we have seen that. These are drafted many, many years ago, sometimes when the system was manual and all that, when documents were there. But today, completely redundant, impossible to verify certificates. But nevertheless, we see that a large chunk of our branch auditors have signed it and sent it. So sometimes you wonder, then it's probably because of that, the pressure which comes. Last day, all of this is being informed to the branch auditor. Just as our audit is over and we are about to step out, they will bring 10 of these pro formas or certificates and say, sir, here also you need to sign. And there will be hundreds of documents which the branch auditor has to sign. And many a time, without proper mind application, something will be signed. And God forbid, if there is some problem there, like what happened in the PNB case and all that, there is a person who did the branch audit also had to face the music, because there were some certificates and all of that, and without proper mind application it was signed. And unfortunately, when a fraud came up, then all of these things were dug up. How did the branch auditor certify? Obviously he has seen it, and after seeing it, he has not reported it. So he has also colluded. That is how the unfortunately the system goes, right? Anything happens now, we are also treated as a criminal party to any offense or any fraud that happens. Very, very unfortunate. We would have been there only for 3-4 days, but we are also as professionals, also tagged along as part of the conspiracy theories. Review the latest RBI circulars. Very key. Master circular by and large has is a good compilation of all the matters, and so have a look at the and ensure that you carry the copy of the master circular with you, but also read up and understand, because after the issue of the master circular also there would always be certain specific circulars on specific areas to ensure that that the correction with respect to the RBI circulars is also done proper. Review the previous audit reports, LFAR, and all other reports. I'll come to that in another slide. But it is important because there are observations made by earlier auditors. If we are coming in a statutory audit, or an internal audit, we would always ensure that we look at what is written in the key audit matters, or we would look at what are the the negative observations or exception reports which are there. It's equally important, if not more, in the case of a branch audit also. And of course, our ICAI requirements, engagement letter, NOC, etc. I'm sure all of us are complying with all that. And certain pre-audit activities which we need to ensure. Again, sometimes we see that many of these things are not done when we sometimes do peer review of firms. We sometimes see that many of these things unfortunately get diluted. That copies are not kept, and appointment letter is there, but then it is an email received, it's not kept in the file, and all of these things are things which we need to be very clear now, because times are bad. There are multiple agencies which are looking into what we are doing, be it our own internal mechanisms like peer review or QRB, etc., which are great. QRB particularly is I would say something that if it is done well, it's really good for us. Our own professional seniors or elders who are experienced will come, sit and spend 2-3 days looking at only that particular file which is assigned to them. So a lot of a lot of things come up when they are reviewing that. So that's definitely a good thing. But the problem is we need to be geared up and equipped for it, because once again, let me repeat, some of you here may be handling it at the central level also now with NAFRA and all of that chasing us. Our documentation is so important, and which is why I thought I would start with planning first and then move to documentation, because no matter how much we talk about this, it can never be overemphasized, because planning is key. And every time anything I talk about when it comes to planning, please understand that all of these aspects should be clearly documented and available in the file. So your time budget, risk analysis, identification of critical audit areas. It's not important that you just earlier times you would just mark something, take a trial balance, and just mark off certain areas and tell our team focus on this and all that. But today that's not enough. Please ensure that you create a document which says minutes of instructions given, particularly the role of partners. Many a time when we look into the files, we see that the role of partners is sometimes not seen in the file. Obviously, everything is controlled by the partner. Instruction is given by the partner, supervised by partner. All issues are closed by the partner, but when the documents don't speak, because most of these things would have possibly been done orally. Instructions are oral, closure of issues are also done orally. So that's oh, my voice is low, not audible. Okay. Am I better now? Yeah, I'll keep my speaker a little low. Is my voice better now? More audible? Yeah, if I'm not audible, please somebody, you can tell me. I think my system is a little further away. I've moved closer. Okay. Now, communication with the branch manager, other key personnel also is very important, and the list of agreements. So each of these things, requirements, agreed upon dates. So communicate, and document. Whatever it is that we do say, whether it is with the bank, with the with the team, with any external. Sometimes we may ask for external validation for certain matters. We may say that a stock audit needs to be done if we are not happy with something, but ensure that you put it on paper. Write to them saying that, I would like to have a stock audit done for ABCD, or I would like to have a verification done for, XYZ, because let it be there on record. Let it very clearly be there on record, because otherwise there will be a problem tomorrow for us to substantiate that, that our work has been done. Now, specifically, certain aspects we need to pick up when we go for a branch audit. What is it that we need? A certain list that we create of things to do, kind of list that we give. Of that, ensure that these items are there, which is why I thought some of the important aspects I will specifically bring it out. The high risk account identification process. Simply because because my topic here is advances. So everything that I'm saying here, I will finally connect it to advances. And so most of what I talk about, be it from the planning side or from the documentation side, my intent is that I'm heading towards the document, but towards the advances or large advance verification angle. So identify what are the high risk. Identify the accounts which are upgraded from NPA. Very, very important. Now with the new November circular, read with the February circular, account upgradation, and earlier banks used to take different views. So if only interest is repaid, they will say that this need not be classified. We can upgrade and all of that. That's all now clear. You can't do all that, and I'll come to that. I have a couple of slides on these important circulars also. So I'll talk about it when I get there. But it is very, very important that we get hold of these lists. The reports that I mentioned earlier, all the external reports, all the inspection reports, exception reports, they will not offer any of these things to you. Unless you ask for it, you will not get it. And many a time, even if you ask for it, you will not get it. They will say it's not been done. Last year, there were no audits. Particularly in the post-COVID world, we see anything you go to a branch and say, they will say, sir, last year nobody has come. Last 2 years, no inspection report, no internal audit, no RBI audit, no AQR report, nothing has happened. No FI. They will say all these things, but then don't leave it at that. My own experiences, even if they say that, you write to them and you write with a copy to the head office, and things which they said are not there will suddenly come from somewhere, because they are bound to respond. If it's not there, insist, tell them in writing, we want, okay, if it's not done, we want it in writing. Because if there is something, if there is a report, or there is every time we go, because they are continuing to do their work. Even during the entire COVID phase, the RBI SSMs were at work. We are handling two central audits of two banks in Kerala and two banks otherwise. And for all these four banks, we've been regularly having quarterly SSM meetings. Even during the peak COVID phase, they were at work. Many of them were visiting branches, small branches. They were identifying issues and telling us about specific issues which we needed to focus on. So somebody says that there has been no RBI inspection for the last 2 years. That cannot be believed. Trust me on that. Now, the limit-wise, party-wise breakup of advances, bills, LCs, funded, non-funded, post-shipment, pre-shipment, all these things are dangerous, because many of these things are not in the accounts also. Many of these facilities, unfunded and all that, will be outside. So you have to be very careful, get hold of all the documents necessary for that. And because it's important that you get these things early. You cannot, when you have only 3 or 4 days to do it, and when you are putting your best team, and in all probability even the partner may be there for 2 or 3 days, it is important that these things are all ready by the time we go there. Details of fresh loans, contingent liabilities, very, very important and critical. And identifying the risks. Now even RBI has moved to the risk based internal audit mode, and they are also expecting us to be in that mode, because the kind of questions they ask, they're initially, when all of that was happening, they were also not trained in that, but today they're all trained in the risk based approach, and they are expecting us to also be trained in that and to also be looking at it. We, especially people who've been in profession for many years, are not really used to being in the risk based audit space. We're more of detailed compliance and substantive verification has always been the way that that we've been doing it. So risk-based approach, a lot of us have taken a lot of time to actually shift our perspective to that. But here it is important that we not just do it, but that we also document it. Again, let me say that everything I'm saying connected to planning is finally heading towards that. Internal controls, compliance with guidelines, critical stationery. It may seem like a very small item, but the fact why I've written it is because it's an audit risk. Stationery in these digital online times, what stationery are you talking about is something we can think about. But let me tell you, if time permits, we can talk about a couple of instances of problems which are connected to the stationery angle. Suspense and dormant accounts, again, very, very dangerous. We have seen certain amounts lying in these accounts, which are fraudulent in nature, or bills which are which were drawn at some point in time, or the the P notes which are taken and drawn at during a different age and a different time are still lying hidden in many of these banks and branches. A lot of things which are today no longer instruments, which are today no longer prevalent, or practices which are no longer today prevalent, but nevertheless which were there at one point in time. I'm telling you, many of these things are still lying in suspense and dormant accounts. So while we focus on all the large moving accounts and the large balances and all that, it is also important that we give importance to, if something is in suspense, that means there is a reason why it's in suspense. And if an account is lying dormant, there is a reason for it. And it is important that we know the reason. Then it's up to us as professionals. We can accept it 95% of the time, it will be acceptable, but a clear 5% of the time, it will be something which needs to be reported and escalated. I'm not getting into this. I already spoke about it: concurrent audit, risk-based internal audit, revenue audit, credit audit, system audit. And these days, especially in larger branches, all of these are there. All of these are there in one form or other. It may be a specific assignment done or something done at the head office level in a central manner, but there will be observations about some of the larger advances or some of the accounts or some of the systems or processes in these branches. So specific report for the branch may not be there, but you must also ensure that if there are any comments about the branch being audited by any of us, that should also come to our attention. We don't want a situation where after our audit is over, you are getting a call from the central auditor who's saying that, have you looked at this? This is reported by RBI, or this is reported in the system audit, or this is reported by inspection, but I don't see any comment in your audit report. So have you looked into it? It's a very embarrassing question to take, so it is as far as possible, if there are any such observations, kindly go through it while you are doing the audit here. And these are all fundamental: obtain the no objection letter, engagement letter, documents, communicate. I'm not getting into it. I think I've spoken about it, though it's only written here. While talking about the earlier slides, I think I have covered all of these to a large extent, and I think it's important that I move on. And finally, these are the reports which are to be issued, and for each of these reports that we know, please ensure that your documentation is in place. For the branch audit report, ensure that there are comments in your branch audit report. Please don't just say yes, no, not applicable, and give nil reports. It's because that is happening that today branch audits are not being taken seriously, and all the managements at the top level, they are wanting to do away with it. Most of the banks are doing away with it. The signal from the top is very clear: branch audit has to be done away with it, because we are not getting any utility from it. This is very sad. It's very unfortunate. A lot of banks still continue to have it. So wherever it is there, let us just do a good job, so that that the message should go that branch audit is relevant and that branch audit is important. Because we are also forced many a time at the sitting as central auditors. We've also had to be a part of this centralization process, but that's the way it is. When that's the tone at the top, there is very little that we can do as auditors. We can convey our views there, but beyond that, it is a decision which is to be taken by the management, whether they want to centralize it or to have branch auditors. So when you're doing a branch audit, let's do justice to it so that at least that activity continues, in the long term also. LFAR also something which is not taken or given the adequate seriousness it deserves. LFAR was thoroughly revamped a couple of years back. A lot of changes are made. So please ensure that it's a good ICQ, so to say, which is mandated by RBI. But unfortunately, most of the time LFAR is filled much after the audit is over. The whole team comes back to office, sits in the office, and then starts drafting the responses to LFAR. I've seen that happen. On credit price sell and so many things. People are sitting, getting back to the location, and then calling up and asking questions. Is it like this in the branch? Is it like that? No, that's not how. That's not the intent of an LFAR. It's very clear. RBI could have just they could have easily merged it into this, but they didn't merge it. The branch audit report is separate. They want a separate control questionnaire to be separate. So today, even we are certifying IFC. The banks started insisting on an IFC much before the ICOFR and all of that came. So at least now let us ensure that we give it the importance it deserves. I'll move on. I'm so far moving as per plan. I thought by 5:45 I should get into the advances, and so next a little more than an hour or an hour and 15 minutes, I'll try and take us through some of the important aspects on advances and some of the important issues. Practical issues is all I'm going to be looking at. And before that, just to give a primer, because I do understand, I'm told that there are also a few people who may be doing it for the first time. So I was told don't directly jump into issues. Just give a broad overview in case there are first time auditors also here. So just a couple of slides, an initial primer on the types of advances. There are term loans, bill discounted, agricultural loans, cash credit, unfunded. So all of these come together, and that is what is finally called. I'm sure all of us know what advances are. And now let me start, because I'm coming directly from the documentation side. So I thought I will, before I move into the issues, I thought let's talk about what is it that the LFAR talks about from a advanced process review side. What are the questions? I'm not getting into individual questions, but what is it that is expected of us, from a reporting perspective? Obviously, any violations or any deviations seen, we have to report. But over and above that, there are specific questions which are there. So these are broadly the heads under which LFAR would want us to report on each of these areas. And what is it that they're looking at? From what perspective? Credit appraisal angle, they are looking at the integrity and competence of management, financial track record, credit rating and CIBIL report, audit qualifications, economic viability. Now, why is this important? Now, for those of you who have seen the RBI, risk-based reports which are done at the head office level, you will see that many of the banks, some of the largest banks, if you read the AFI annual report which they give, there will be scathing remarks about the management, about the process of credit appraisal, about the integrity and competence of management are commented on, which is why they are expecting that at a branch level they have delegated that to us. It's difficult for us to write anything about it in the negative, unless there is reason to believe that there is an integrity issue or a competence issue. But reports which are being given by our respected professionals, where they have actually written about integrity issues of specific people in branches, written about the competence or lack of competence of people in branches, etc. There are people who take this seriously, and they have written. Probably there was an issue there when they audited. There must be a background why they wrote it. We are not aware of that, but nevertheless, we are seeing that there are sometimes when you consolidate, the central auditor has a job to consolidate all these issues sitting there and issue a consolidated LFAR before within 90 days. Now that usually by June 30th, all the banks are expected to have their consolidated LFAR submitted to RBI. So while doing that, we see these issues. The financial track record, credit rating and CIBIL report, these are all part of the credit appraisal process, which needs to be looked at seriously. And sanction and disbursement mechanism also, the sanction limit, compliance with pre-disbursement conditions. Again, let me tell you, this is very dangerous because there are a lot of pre-disbursement conditions which are mentioned, which many a time are not even taken seriously. Am I not audible here? So I'm seeing a couple of comments here. Is this okay? Yeah. All right. Thank you. In case there is some issue, I would request the host to also just let me know so that I can do that. I'm seeing a couple of comments just popping up on my screen as I speak. So the sanction and disbursement process also needs to be looked at very seriously. You know, the borrowing powers and all of that, and we need to document it and we need to report on it. Monitoring angle. Now, monitoring, what is it that we need to report on? The correspondence file, consortium minutes, project inspection, unauthorized withdrawals, NPA SMA classification on stock audit, financial information and renewal, the recovery, the devolvement of unfunded limits, restructuring. Now, look at this slide. Look at the amount of things which we are going to discuss when we just talk about advances monitoring, and many of these issues which I'm going to talk about, I will be speaking on practical issues which we've seen when during the course of our audits, and many of these things are issues on which we need to report. Look at the risk that we are taking as professionals if we are to sign on all these things with all their questions. We write yes, 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 or not applicable without properly reviewing it and without properly looking at it. The risk is phenomenal. So let us take this seriously. The advanced monitoring mechanism in the branch is an area where we need to spend time. Identification of NPA is certainly important, but it is equally important that the whole monitoring mechanism and each of the elements that I have mentioned here are also given its due importance, for which many of the issues that come up, which we've seen, come when we verify the correspondence file or the minutes of meetings. They will always tell us that everything is clean, and many a time pure account movement, when you look at Finacle or whatever other software they are doing it, pure account movement will not be enough for us to gauge the health of an account. Health of an account, many a time we get to understand only when we go through the correspondence file, because on the face of it, it looks okay from an account movement, but then in the correspondence file we are seeing a lot of strong emails and letters being sent that you need to repay so much within so much time, or we are reducing it, or we see cases where their limits are withdrawn, their limits are reduced, sanction limits are curtailed. And many of these things are known to us only when we go through every large file, or every advance that is maintained will have a specific correspondence file. They will, all major advances will have a correspondence file. They will also have a legal document file. So when there is a correspondence file or a legal document file, it is important that you go through it. So please go through it, because a lot of issues which we've seen have originated from there. At least the discomfort originates from there. Issue may come later during the course of audit, but discomfort has to come, right? We need to feel, that skepticism in us gets triggered when we go through the consortium minutes, or when we go through the correspondence files and all that. In otherwise good, clean accounts, be it ILFS, DHFL, it's all gone through this route, wherein the some documents were seen during the course of this, or some letters were written. Somebody got wind of it much before it became an NPA. We've had the opportunity to flag these as accounts which require close monitoring, because of conversations which are there, which nobody will tell us about. No bank manager or officer will tell us these things, but it's all there in the files of the bank. So understand that. Similarly, unauthorized withdrawals also. Sometimes, we see these things, only when you go through the monitoring mechanism, when you go through it, would you see this. I will get into that, some instances. So on most of these, I have a couple of practical slides, so I'll just stop for it, but understand how important that is. And the entire gamut of documenting all of these. We have seen it, we are convinced, but our file should speak. I'm sure many of you here may be thinking, is it practical to do all this? I also thought like that, but then times are not good. Few years ago, we could be a little more lax when it comes to documentation, or little more. Our focus is entirely on work. That's the problem with us. Our focus is always entirely on finishing the work and doing a good job and ensuring that our report is covering everything we've done. Our focus is always on that, but many a time our documentation takes a back seat. I think that's one area where the probably the larger international firms are better than most of us. We are all from the conventional school, so I would say that in terms of the work we do, personally, I would think that we are better than the best. I have no doubt about it in terms of the work we do, but sometimes the documentation, I'm sure, offers scope for improvement for almost all of us present here who are part of, homegrown, so to say, firms, or many of you are sole proprietors also. So these are some of the items. I'll probably share my slides for those of you who have interest in it. And so I'm not really going to read out each one of these, but it is important. And today, many of these things are online also. Now, there's one important item is charge creation. There are many, especially during COVID times, we realized that going physically visiting branches and all that was impossible. We had to do a lot of this work sitting in some zonal office or head office, and in one particular bank where we were central auditors, we had to do 900 branches sitting from a remote location. So it's not easy unless we also equip ourselves technologically, and unless we are also able to rely on technology, and also have a mechanism whereby we data mine and whatever is available by the bank. So charge creation is something, there's something called SIRC. For those of you who are not aware, please get access to it. All the banks have access to it, CER, SAI. So in SIRC, all the documents, important documents, charge created and all of that, hypothecation, all of these are to be entered. So if it's not entered, it's something you need to write about. And this is a very important aspect. This was one area which was, the verification of documents was an area of discomfort, for us, especially when you sit in remote location. A lot of it is scanned, but in the old world, we would actually go touch, feel, see documents. But when you're sitting and doing online audit and all that, through VPN, it is always difficult. Everything is scanned, but then authenticity of that. But then, CERSA is a good point for us, is a good reference point for us to see whether, if it is not uploaded and something, a lot of extra documents are coming to us which are not in CERSA, then, it has to trigger that doubt in you. And all of these title deeds, particularly, it is becomes so difficult for us, to verify. Even statutory audits also, we know now that Caro is also wanting us to, talk about verifying title deeds and all. It's an area now which gives us a lot of discomfort, this title deed. But then, what is the option? We have to necessarily look at it, and in whatever manner we need to get the comfort on reviewing the title deeds. Now I'll move on to specific issues under, just put it under a few heads here over the next 45 minutes or so. We'll just try and discuss under some of these heads what are some of the practical issues seen, and how did that come up, and what is it that we actually did. So I've just clubbed it under quality of appraisal, health of accounts, greening or evergreening as we say, drawing power, agricultural advances, pre-post shipment, restructured, and also a few in the others category. I will talk about education loan, housing loan, all of that. So with that, I think almost all the major categories and the kind of issues we see would be covered in that. So the first is on the quality of appraisal. Now, quality of appraisal is where we start. Now, on the earlier slide, I spoke about it. Credit appraisal, we are expected to comment on it. We are expected to report on it when it comes to LFAR. But then how is it that we do it? How are we able to verify, or or find if there are issues in the quality of appraisal? Well, we have to. It's very simple. We have to. And how is it that we identify issues in that? Couple of specific cases I will tell you. Now, quick mortality is one indicator that the quality of appraisal in a branch or a bank is poor. If there are a large number of quick mortality cases, quick mortality means you give an advance and within 6 months, 1 year, or 18 months, it turns bad, or it becomes an NPA, or becomes a an almost NPA, trust account or SMA2 or, but if that is happening, then there is a problem. So that means that appraisal mechanism, there is an issue. If the risk identification is not done properly, there are sectoral risks. In the bank itself, there are sectors. The banking system has sectoral risks. Within each bank, their board has to formulate a policy for identifying sectoral risks. And despite all that, without proper mind application, if advances are given to risky sectors, there is an issue. Multiple cases of restructuring, if it is there is an issue. CIBIL not being used properly, there is an issue. Unhealthy accounts, bad accounts are given additional facilities, there is a problem. Diverse sector risk, I already spoke about it. So now you know. So in each of these points that I'm trying to say, this is the way in which, and certainly many more ways are there. I'm just sharing a few. Obviously, I'm sure there are a lot of very experienced people here who can add another 10 more to it. And there will also be very many young, technologically, very, very, adept youngsters here who can, through technology, give us many more suggestions. So this list will only grow. It's only an illustrative list that I have presented before you. Now, this is one case, actually. Some of you here, we would have worked together on joint audits. And if some of you here, I'm unfortunately not able to see the delegates, but since there are a large number of you from Chennai, I've had the opportunity to work with at least half a dozen firms based out of Chennai as joint auditors. So many of these cases, when I talk about it, probably you will know which I'm talking about. Obviously, I'll not be taking names here. Some of the numbers and all that have changed, but every single instance I'm bringing here are things which we have seen in some place. Now, credit appraisal, we've seen risky sector, but deficiencies ignored. This is a case where real estate sector was under immense stress, and there were specific issues. Now, there were the junior person who went there has also written that, documented regarding the track record of the company, etc. Nevertheless, the loan was sanctioned. So quality of appraisal does not just mean that quality of appraisal at a lower level or at a higher level. Both are important. That's the point I'm trying to drive. Sometimes you will see that the appraisal mechanism at the junior level, at the lower level, is very good. They have an excellent system. But then whatever is written in their note without any proper justification is ignored, and loans are sanctioned. So that's a possibility that it could either be collusion, or it could be just a target meeting mode, whatever it may be. Point is that it is a deficiency in the appraisal mechanism from the senior branch manager. Now there will be a lot of instances where the senior branch managers have given all instructions, all of that, but it is not complied with by the juniors. Vice versa, both things happen. But this is a specific case where the sector was risky, identified deficiencies, but ignored. Case where we have to report. Now this is a case of CIBIL report, whether it is reviewed, not reviewed. Many a time we see that they are not even looking into it. It's very clear as daylight that it's a minimum prerequisite these days that you have to get hold of CIBIL report or Experian report or one of these agencies that the bank is affiliated with. It's very clear that it has to be done, but not done. So no proper credit appraisal, CIBIL reports, discrepancies, etc. seen have been ignored. And when you see it, you see that there are defaults. Some of the specific cases we start looking at it, there are defaults. Now let me take this a step further. In the case that I'm talking about, this is to a farmers, conglomerate kind of thing, where a group of farmers came together and something like a cooperative. This is something that we saw in Maharashtra. And along with this, for the purpose of this loan, the individual KYC of the farmers have to be kept. It is part of the loan documentation. So it is important, a part of the loan documentation. Youngster in our office who picks up and looks at it finds that somebody who's KYC PAN card of a 80-year-old farmer has the photograph of a 30-year-old. So in some other case, it's a picture of a man with a very thick, long mustache and headgear and all that, but the PAN card is that of a lady. And so many instances of bogus, KYC documentation being kept as part of this. This is a fairly large loan. A few years ago, this would have been possibly a 100 crore loan or something, wherein, part given to this, cooperative consortium of farmers. The whole thing turned out to be a fraud. The entire thing turned out to be a fraud because everything was wrong. Once you started looking at it, we found that there was a mismatch in the land holding reported. Farmer has to say that the produce, the item sold by the farmer as declared here vis-a-vis what is declared in the major, everything. Quantity documented, the quality, quantity, the everything, the volume, any parameter you look at. So which basically means that either it has not been looked at or it is seen and ignored. So this is fundamental that a KYC documentation, if there is a mismatch and if it has not been found out by the branch, it is a clear case of appraisal deficiency. And if you see it in one case, there is every likelihood it will be there in 100 cases. We will be forced to increase the quantum of sampling that we do when it comes to such cases. So this is how appraisal quality needs to be ensured, and we need to report it. We've seen that it requires to be reported in LFAR, so report it, but it will not end there. In a case like this, just reporting it in LFAR alone will not end. This is a clear case of an account becoming NPA. Beyond that, it becomes a fraud. If it becomes a fraud, you make 100% provision. You also need to report to RBI. It goes all the way there. So our job does not end. It's an appraisal deficiency, but you can't just restrict our scope to say appraisal deficiency. I've seen it, I've reported it, my responsibility is over. No. All the way up to the fact that it is reported to RBI. Up to that point, that responsibility is there with us for us to report. If any of these elements is not done, we need to say this is not done and highlight it as a very major critical observation in the report. And many a time it also makes sense to inform in case you see something like this at the branch level. It may even be good if you can take it up at the head office level with the central auditors present there. All these places you can easily find a connect to one of the central auditors, and all these places will be somebody known to you or known to somebody else who's senior in the profession who's here. So try and connect and inform directly also that I've seen something like this. Please take this up. I have limited access to information sitting in a branch. You may have more information and you have access to the top management. So kindly highlight this matter. There's nothing wrong. We get a lot of calls when we sit in the role of central auditors from a lot of professionals, and we greatly appreciate that. And when we do branch audits, we have also done the same. When we've seen major issues, we've made it a point to talk directly to the central auditors. One of them, sometimes there will be 6, 7 central auditors for large banks, but we always tell one of them we will inform, saying we've seen this. Then they will say this is not our area. We are handling only treasury and all that. They will give us the number of the partner who's handling the advances, and we will speak to the other firm, not known to us, but we'll connect and we will tell them that we've seen something like this. So it's always good. It only enhances your own, and there could also be an alternate perspective, because here the issues you may have seen one, but sitting in the central office there could be of a similar cooperative or a consortium may have multiple accounts in multiple branches across the country. You may not know that sitting here as a branch auditor, but once you take it up at the head office level, they will have access pan India, and or even sometimes there are many of these accounts have global implications also. So important that it is escalated and informed. I'll move on to my second point. That's on the health of the account. Yeah, I'm okay. Audible, right? Somebody please highlight. I would request the host to let me know in case there is an audio issue, because sometimes for participants, many a time it could be your network problem. But generally if there is an issue, I would request the host to let me know there is a problem. Now moving on to the health of the accounts. Again, very, very, very critical, because this is an area where a lot of I'm seeing a gentleman multiple times telling me that it is not audible, but if there is, there is an issue, then I would, request the host so that I can try and see if I can do anything about it. Right now, I'm trying to speak as loud as I can, and I think my system is reasonably close to me. So pardon me if I'm not audible. Yeah, I'm okay.
Sir, they are suggesting to use earphones, sir.
You think, but that's okay. Am I audible to you?
Yes, sir, it's very clear, sir.
Then it's fine. Then it's fine. But then I'll prefer to go this way. If I'm not audible to you, then I'll go pick up an AirPod or something. But if I'm audible to most people here, then I think I'll just continue. Right. Thank you. So moving on to the health of the account, these are important. We spoke about CIBIL. Now the operation, performance, DP, which is drawing power, devolvement, check return, exceeding, etc. are very, very important here. I'll talk about this. There are a few instances I will be speaking about. There's only an opening slide here. The stress test, what are the stress points in each account, etc. are important. Now, this is something which is most commonly seen, the year-end regularization. I'm sure all of you here who are experienced in branch audits will agree with me that year-end regularization is the biggest problem that we've had to face, wherein the branch obviously in almost all the cases they are not transparent, and they're not telling us whether they've done some year-end regular. They have their own reasons for it. So a couple of in specific instances we've seen, I will just share with you what we saw and how we found out. So this is a case where the party enjoyed both an overdraft and a term loan facility, and they would consistently remit the interest at the end of each quarter. So we are happy. Now let's look at March quarter. March 31st is fine. Going by prudential norms, we are all fine. All the parameters mentioned in the norms complied. But then what happens? April 4th, April 5th. And sometimes they wait a little longer especially when they know that there is a year-end branch audit. Sometimes, they will wait a little longer. They'll wait till the branch audit is over. But then if you look at the earlier quarters, you will see that it is consistently happening. That in June, it is regularized, but by July 3rd or 4th, money is withdrawn. September 30th regularized, October 4th or 5th withdrawn consistently. And then you know that this is something where the branch manager or whoever is handling the account is playing around. They are bringing the money many a time from some other account, unconnected accounts. We've seen that absolutely no connection, but an entry is passed from another account altogether to show that credit comes. 3-4 days later, either the entry is reversed or sometimes actual money itself comes and money is taken out. Probably the customer may not even be knowing. The branch would have tried, customer would not have remitted, but to keep it afloat, they are doing something internally many a time even without the knowledge of the customer. These kind of things happen, and we've seen that in certain branches they are consistently doing this. And when you look at it, there's no other operation. There is no operation in either CC term loan except for this entries which are contrasts. One entry on a day, 4 days later contra being passed. All such cases we have to look at it very seriously, and we have to take it very seriously. Not just that it should not end by us writing some comment in the and many a time we write very cryptic comments in our reports which nobody can understand. It will require a cryptologist to decipher it. Nobody is able to understand some of the comments written by many of our friends in the profession. Probably because they don't want to disclose it, or probably because they have not understood the issue. We wonder sometimes major issues are seen, and if they have not seen it, we know it's negligence. But many a time it is seen and reported, but we are not able to understand. So sometimes it's written in some sort of code, and then we have to figure out what it is and all. So please be clear in the way you write. Now, this is a case where it's as good as a fraudulent practice being done. You cannot accept this under any circumstances. These isolated transaction and subsequent withdrawal should be viewed very seriously. Financial health of the borrower should be there. We've seen cases where That is what I was saying earlier. The borrower is not even aware. The borrower is completely shut shop. We, in a specific similar instance, we saw this. We decided to talk wherever we have doubts. Sometimes we try and through our sources or through some person known to us in the vicinity, we'll say, go have a look. Please go visit and see, or just find out about this business and all that. We went there and found that this particular borrower was shut at least 3-4 years ago. Shut shop and gone, completely gone, wound up, owner not to be found, absconding. And yet the bank is continuing to do this and continuing to keep it as a healthy standard account. So how is this acceptable? Moving on. Statement of account shows credits and immediate debits and virtually no operational transactions. Borrower services the interest only after repeated persuasion and reminder. Now, this is a case where borrower is paying. In the earlier case, I said the borrower does not even know. But here the borrower is servicing it, but only after. So this is a flagged account for us. For us, we have to flag this. This is a stressed account. In every report that we sign off, please include a segment about it where you talk about accounts which you have classified as NPA. Don't just write MOCs and leave it at that. If there is materiality, small account, 30,000 rupees, 20,000 rupees and all that, is small accounts and all that, nobody is expecting us to write stories. But from the perspective of a branch, if you feel an account which is material is being classified, please add at least a small para on why is it that we had to classify it and not the bank. They should have done it. There is system identification, there is system for this thing, and now 90-day norm has also become tighter. You have to do it day wise. Earlier, banks would do it quarter end, but now with the November and February circulars of last year, now it's very clear. 90 days is 90 days. Doesn't matter whether it falls on December 26th or December 21st. It doesn't matter if it is 90-day, gone. You don't have to wait till 31st December. You cannot give a person time, because many a time by 31st December it would have been regularized. It will be NPA on December 22nd, but by 31st December they would have somehow managed to bring the interest back. But that won't do now. Just servicing of, there would be a reason why something became an NPA, but just by solving that issue, you cannot upgrade it. For upgrading it, now there is clarity. It's very clear. I'll talk about it when I come to that slide. I'm sure all of us are already aware because this is the second year after the new circulars have come. But in case some of you are doing it for the first time, I'm sure it will be beneficial when I speak about it. So here again, financial health of the borrower needs to be ascertained. Credits which are withdrawn needs to be reviewed. Now here is a case where debtors at the year end numbers, obviously I have just changed it from whatever original numbers we've seen. Here the debtors is 19 crores, of which debt outstanding for more than 6 months is 10 crore against sale of 25 crores. Now how is this possible? Now, these are all things which we need to look at. Account review, if you look at it in Finacle or Marvel or whatever software is being used, that's fine. It's all being serviced. But our job does not end only by looking at those accounts. We also need to identify stressed accounts where there are problems, because they may somehow be servicing it, but nevertheless, it's only a matter of time before it becomes an NPA. So we have to always be one step ahead when it comes to identifying and reporting stressed accounts. So there should be, in the earlier slide I said, you must write a paragraph on why we classified an account as NPA and passed an MOC, memorandum of changes. For those of you who don't know what an MOC is, in banks you can't go and pass an entry in the system. Since I was told there are some first timers, in a regular audit we would pass an entry in the books, but in the bank you cannot pass the books. On 31st March they would have frozen, and only at the head office level can they make any kind of changes. Branch level entries are locked. So all entries which are passed during branch audit, even if it's on 1st April, if you find an entry, be it for the branch or for the auditor, if you need to pass an entry, it has to go through what is called a memorandum of changes. So the MOC, the entry has to be written, and all these entries go to the head office. There is an MOC consolidation that happens, and then one entry is passed there at the head office level. That's what happens. So since I spoke about MOC, let me also request that when you pass an MOC, please write the entry. Sometimes people just write the story. That's not enough. At the head office, it's only an entry that can be consolidated. A story cannot be consolidated. It's as simple as that. I'm sure, I'm sure everybody understands that. You'll just say something like interest so much has not been accrued. If you write that sentence in the MOC, then somebody it will not find a place in the MOC. The good work done by you is not resulting in the correction unless there is an entry pass. So you write the story like how we would in good old days when we studied accountancy. We would write the entry in the bracket. We would write the reason for it or the narration for it. And all these days, thanks to SAP and ERP and all that, we have forgotten the art of writing entries with narration. But still, when we study, it's still in the same format. So bank audit, we should have to go with that, wearing that hat. The us, which are the student in us, which studied accountancy, that approach we have to write so and so the DR, so to CR and all that, and write the reason for it. Only then will it get consolidated there. So please write down the reason for NPA and MOC. And second part, please list down which are the major large stressed accounts. It is so important because trust me, a branch audit stressed account report in all probability will reach all the way to the boardroom. Some of the observations which are going to the board, and finally there is a whole segment in every board meeting where the auditor makes the presentation on stressed large accounts. We talk about it in the boardroom. Where is it that these observations are coming from? It is coming from people who have done a great job sitting in the branches, identified it. The central auditor, by and large, of course, the overall responsibility is there, but then end of the day, that responsibility is divided to the branch auditors, and the quality of work of a central auditor is so dependent on the quality of work that happens at the branches. So please write about it. So this is a case wherein the debtors was 19 crore as against 25 crore of sales. So there is a problem. So when we saw this problem, we started digging. Branch said no problem, it's a temporary cash flow issue, working capital, blah blah blah. They said that. But then we started studying, Googled up about it, and found that there were some issues. There was a problem between directors and all of that, and there was property involved, collateral, and there were issues. Even the bank could not get hold of it. Bank lost a lot of money in the process in this particular case, only because the starting point was from some person, junior article, who identified this and brought it up saying, sir, I think there is a problem here. So that has to come from there. That original idea many a time comes from the junior. So let us understand the importance of training our young team, which is doing the work ground level, because they are the ones who are going to finally come out with all these really good observations. So that's the second part covered. The third part is it's as good as fraud. Let me put it that way. Greening or evergreening, we'll find a whole segment is there in our guidance note also on this. And this is something we have to take very, very, very seriously. When we see cases and when we've identified cases of evergreening, we cannot afford to be silent on it, and we cannot afford to give them the benefit of doubt. If we feel that there is a fraudulent practice involved, it is important that it is reported and that it is exposed. Simply because the quantum or the intensity of it we will understand only when you see it from the perspective of the head office. Because small transactions which happen in silos finally lands up in something much bigger. Let me just share an example. I think it was in 2005 or 6 that we had the opportunity to, RBI appointed us to do the work of when Oriental Bank of Commerce took over Global Trust Bank when the bank crashed. And so in 3 weeks time, we were told to completely, decide the valuation for OBC to take over the erstwhile GTB. This was I'm sharing this because it's all there in the public domain thereafter. So our team obviously went all across the country, all the major branches. So what we found was that in most of the branches, everything was all right. Systems, processes were top class, much better than what we had seen in any of the banks we'd audited before. Top notch investment in technology and all of that. But in 4 or 5 branches, That is where they had decided, consciously decided, that all these problems were centered in these 4 or 5 branches. Let me tell you, in each of these 4 or 5 branches that we went, we ended up making it 100% NPA. Literally, every account virtually in some of these larger branches had to be classified as NPA because it was happening there. So it was a conscious decision at that point in time by whoever was sitting there, that there were certain issues. So it is a very unfortunate situation that happened back then. But nevertheless, the point here is that those things need to be reported, and it is important that those things are highlighted in the right perspective and brought out, because you may not know, out of these 4 you may be auditing one and you may have seen 1 or 2 things, but if you leave it in isolation, the gravity of the problem may not be understood. But if you've seen major issues in branches, please escalate, because then there is a whole bank risk which will have to be reviewed sitting at the head office level. Now I'll try and talk about each of these couple of instances. Now, check purchase. Now this is a very dangerous instrument, check purchase. Simply because this check purchase is done because the bank is not in a position to give an additional facility. Now this is not permitted, but nevertheless, we are aware that this is happening. Most banks have a clear written policy. RBI has come out with all the diktats on that this should not be done, cannot be done. There have been enough, red flags on check purchase, but it is still happening. So a party whose account is about to turn bad, there is no way to sanction an enhanced limit or an ad hoc limit because the account is so bad. What they will sometimes do is buy a check, and that entry will be parked somewhere else in the ledger. It will not be mapped to this party. The check purchase will be a book entry which will be sitting somewhere else. It may be sitting in suspense, or it may be sitting in some fancy name. They may just decide to pass that entry somewhere. And with that CP, they will regularize this. And subsequently, the check will be dishonored. Check has its term. By the end of the term of the check gets dishonored. And this rolling happens. This is the case where the cash credit account brought within the limit towards the end of the quarter by transfer from current account of a sister concern through a check purchase. Routed through a sister concern. So 2 issues here. 1 about the check purchase itself, and 2, the entire sister concern mechanism itself needs to be looked at very closely. In many banks, you will see that in the sanction terms itself, there are several things where they talk about related party and sister concerns and all that. For the purpose of DP, balances due from sister concerns are to be eliminated. In many banks, it is there in the sanction letter. You will see it only if you've gone through the sanction term. That too, it may not be there in all cases. That is the problem. So ensure that you give that direction to your team to go through the sanction terms and have clarity. What are the items to be included in drawing power? I'll talk about it when I get there. But as I speak, I'm just trying and connecting because the instances are coming to my head. So when I speak from experience, sometimes I may just go in different directions here because this has an impact on all these aspects. It has an impact on sister concern. It has an impact on related party. It has an impact on suspense account, check purchase parked there. It has an impact on drawing power, all of this. So for this, what do we need to do? Especially for suspicious credits, you need to try and find out what the source of credit is. Sometimes it's not easy. I know that it may sound theoretical when I say it, because we also struggle sometimes when RTGS credits are coming in to actually get to the source. It's sometimes not easy. But as far as possible, let's try. Sometimes it's not easy. It's just not possible many a time to get hold of the source of credit. But wherever possible, 90% of the cases, we will be able to analyze it. But then it should be part of our mechanism or part of our methodology to get to the root of the problem, especially when a suspicion is triggered. Now that there is an SMA mechanism, Please tell your people, tell our audit teams, go in depth into SMA 0, SMA 1, SMA 2, and all that. These accounts, these are the problems, especially accounts sitting in SMA 2. There is a problem. If there's no problem, why is it in SMA 2? It's not because somebody forgot to repay. Obviously not. There's enough mechanism in every bank to follow up and all that. So it's not because somebody forgot. There could be genuine situations where somebody is, traveling and all that and was away, or, could not at that point transfer all that, but hardly any. 99% of the time an account sitting in SMA2 is because there is a stress. Stress does not mean that it is a bad account. It does not mean that the party will not pay. It does not mean that it will become an NPA. I'm not insinuating any of these. But I'm saying from an SMA2 category, there could be at least 5 to 10% cases which may result in an NPA in the future. So flag it, check, identify if there are problems. Important that we get to the root of accounts which sit in SMA. Now this again, coming back to, check purchase for account regularization, OD account regularized end of quarter, and the check not presented for several days. So that's a typical case. So whenever you see an account and you identify it, ask them, do you have check purchases? And you identify and you know there are check purchases, find out into which account. Go through the aging. Why should a check sit there for 20 days or 25 days or 30 days? Why is it that that's not presented? Why? There should be a reason for it. Why in the first place was the check purchase allowed? And now that it is allowed, why is it still sitting in your books when you go for the audit? Important flag. Now, isolated cash transactions for regularization. Cash. Now we have moved largely into a digital economy. Nevertheless, we are seeing cases where on the 89th day, lakhs are being brought in cash in many cases. In cash. Important that we get to the root of it. Important that we report it. It may not be possible for us to always get to the source, but then try and see from the teller whether this cash has been withdrawn from some other account in the same bank or by overdrawing. This is a specific case where the analysis of source credit done when the source of credit, the cash teller account was verified, and the corresponding credit when it was verified, it was seen that this was by overdrawing another account of the borrower. So understand how this is happening. Understand that there is a sister concern. When you say of the borrower, it's not the same account we are talking about, a sister concern here. So, but we need to get into this. Peripherally, everything will look fine. You take a look at it, prudential norm wise, the system is identifying in most banks now. So if it's an NPA system would have classified. You can always write a line saying system identification is all right, there is no problem. All accounts which require to be classified are classified. You can get that comfort peripherally, but then we need to dig one step further. That's the point here. Now, loans to associate concerns to regularize bad accounts routed through multiple branches. This is another tamasha which we have seen, where through multiple branches. So then we don't have access to the other branches also. We are sitting in one silo looking at one branch. So when you look at it, we'll see it only from the perspective of that branch. But here, when we see the credits were coming in from sister concern operated same bank, another branch. And these credits came from the associate. So then when you go through it, it's like a loop. It's a very complicated web that you will see in many of these companies which have group concerns. There may be 10, 15 entities, one to the other, holding to subsidiary to associate to. But it's only when you get into it that you will know. And finally, what we saw was the amount, because this money was not just rotating. This money was actually a fresh term loan sanctioned to one of the associates, which means this is entirely, cleared as a result of fresh funds. And as all of us are aware, fresh facility should not be given in order to regularize an account. If that's done, it becomes NPA. I think we are all clear. I'm not getting into the prudential norms here. So here, this is a fresh term loan, but instead of giving it to this customer, Instead of giving it to this borrower, given to some other party connected, and then through multiple routes it comes here and regularized. And bank very vehemently argued, what is wrong? Why not? This associate has the health. Why not? Why could we not have given? This went all the way to the top. This reached the boardroom and finally was classified. At the lower levels, they were just not, because simply because a lot of planning went into it and a lot of people were involved in this at the head office level. So this is not a branch level thing, as you can see from the observation. You know that this cannot be done by one branch manager. This is done right at the top, wherein the senior most person concerned is involved in doing this. So, and that person very genuinely believed that there is nothing wrong. This is not greening, was the argument which he took all the way to the board. But then we had a different view and the board concurred. This is something many years ago. Yeah. So don't try to relate it to anything that you're reading right now. It has nothing to do with any of what is recently reported. Now ad hoc facility is granted again. This is very clear. An ad hoc facility given in some shape or some form, sometimes calling it some new project and all that, are the same borrower. They'll say this is not for this project. This is for the new project. It's for the expansion project. It is for capacity project, or it is for giving it some fancy new name. The amount is sanctioned, and through that account, through that new ad hoc facility given, this is getting regularized. Not done. It is greening. There's no question of ad hoc facility given to regularize an account means it is NPA. Crystal clear there. Yeah, so that's where we are as far as the first few points. If somebody has anything to ask, or I'm not sure, I'm not able to. I'm just once in a while seeing audible, not audible, but I'll probably somebody can let me know if there are any important queries coming here. I can take it. Otherwise, I'll move on to the next topic. Sorry, just give me a minute. All right, so I'll continue with this. Now, this I think is probably the most important, or probably the in terms of us as auditors identifying NPAs, maximum numbers are found through this route, through the drawing power route. Always understand. I'll just take that question. Somebody's asked how is end use. It's tough. It's tough to to identify the end use. But sometimes what you see is one good way is if the audit mechanism is good there, if the auditor is good, many a time you will see that it is reported in Caro itself. You will see it is reported in Caro. And now with the new format of Caro, it is important that we go through the audit report and we will get an understanding of it. Because now the difference between the stocks as per books and as per what is submitted to the bank, everything needs to be reported. And sometimes we see that these are all not reported by the auditor. We can tell the bank, we can insist that we want to see these. Why is it that this is left blank? We would like to see the specific observations on this. This is a mandatory requirement. How can probably the auditor did not realize that the CAR was amended, but we can always tell them we'd like to have the details on this and get a separate certificate from the auditor saying that these need to be looked at. But an effort needs to be made, which is why I'm just telling you some examples that I'm sharing on what how we went about it. I'm telling you. I'm sure there may have been many cases where we missed also. We are because we are not doing a forensic here. We are only doing an audit. So as part of audit, we are only incorporating a few procedures into our audit methodology, whereby with a stroke of luck, we are finding it many a time, but it's there in the procedure. So procedure combined with good luck and God's grace put together, we are hoping that if there is any major deviation, we will find. But there could still be, very, very, mala fide kind of deep rooted. If something is being planned and schemed and done, and if it is done within the using their IT technology and all that, there could be instances. I'm sure, despite best efforts by central auditors, I'm sure. I'm pretty sure that even when the Nirav Modi thing came up in PNB and all that, and I know some of the auditors who were involved, some of the best auditors in the country were there. So there is no way that they would have closed their eye if they were aware of that. So that they very using their systems and Swift and all that, they managed to to do that, and it is very unfortunate. It would have been very difficult for any auditor sitting there to find such cases. So there could possibly be many cases where we may also be missing, but we are hoping and praying a lot of that if there is something in some form, that we will find it, is what we genuinely believe also. Now, coming back to my point on drawing power, now DP is an indicator of the working capital support, which is normally given in terms of that the working capital gap management. That is what is done, and the assessment of that is what we, in simple layman's terms, in case somebody does not understand DP. Now, drawing power is computed based on the differential between the current assets and current liabilities, typically, very simply put. But there again, the critical point is that you need to closely look at the sanction terms, because there may be certain items which are kept out of the sanction terms. They will say that debtors above 60 days should not be considered, inventory above 180 days should not be considered, or they will say that the related party not to be considered, or sister concerns to be eliminated. There may be so many things. We are seeing that in many banks, it is a standard protocol, but in many other banks that we see, it is case to case. Standard protocol, everything is okay. You can take everything in your TP statement, but for certain parties, they are ensuring that it is eliminated. So important that the sanction document is fully read and understood by the person reviewing the file. Now, these are differences between particulars furnished and serious discrepancy. You're all aware now with Caro, that is also getting tightened. Let's hope that menace of this gap is bridged through Caro reporting there. But then again, Caro is only for companies. Most of the businesses here are still in the SME space, so there is no question of reporting on any of this. So it will continue. I don't think much can be done, because there is one stock for audit purpose, one for the income tax, and one for the other authorities and all that. So this is it's a practice that's happening. Not good. We all know, we all understand, but still it's happening. And what is the importance of drawing power? I'll get into it. This is theory. I'll talk about some of the specific cases so that you can connect better. Now, this is something interesting that we saw. The total drawing power was 22 crore in a consortium loan here. Now, it's very clear that the bank's DP is only 45%. Now, in this case, the outstanding was around 11 crores, a little less than 11 crore. I remember this case, a little less than 11 crore. And 54%, so it's because it is 11 crore, the bank's share of DP is only 9.9. It is consistently overdrawn. The balance outstanding for the last 3-4 months is 11 crore. So clear case of it becoming continuously overdrawn, should have been classified. Now, somebody sitting in the branch very ingeniously decided that in all their workings, they made drawing power as 54%. So anybody who has a quick look at it, DP is there, 22 crore drawing power, bank's share 54%, 11.88, balance outstanding is only 10.9 or whatever. So clear, DP is there. But again, somebody intelligent, some young boy or girl sitting there has gone through the file, found that it should have been only 45, found that it should have been only 9.9. I still remember branch manager vehemently arguing, this is a genuine mistake. If we knew it, we would have talked to them and brought it with below limit. We genuinely believed it is 54. It has been done like that for several quarters. It is some clerk who did the working, bungled up, all of that, but then not acceptable. Simple. These are not things which we can accept. It may have been a genuine mistake. So reduce it next time, clear the areas, and you upgrade it. Nobody's telling you that it's a bad account which will permanently remain an NPA, but this is a clear case of we have to classify it. So this is one type of instance which you can see in consortium. Another is what I was telling you, where the sanction term says that debtors above X number of days should not be considered. But here the whole thing is taken. So the whole amount is taken. That fine print somebody has to look at, identify, and do that. Very clear. And this also had an added thing wherein the bank has to determine DP based on its own sanction term. Now, just because the consortium, here the consortium said that you have DP. But that alone will not do, because consortium has worked out DP after considering the entire debtors. But as per the bank's separate documentation with the party, they have clearly said, and we will not consider for our purpose, debtors above 90 days or 120 days. So that has to be removed. So just because a DP is allocated does not mean that's the DP. From the allocated DP, if there is another stringent condition, added condition, there is a reason why it is put there. The board or the management has decided to add another stringent. Normally, it's very simple. If there is a allocated DP, you just take it. Why do you need to add that line? There is a reason for it. And if there is a reason for it, it cannot be ignored. This was another case where it had to be classified. Now, this is something which we see in many cases, and there is a logic also sometimes. Sometimes we've had to, argue, but the banks sometimes have a justification for this in some cases. So I'm not telling you that in all cases where creditors are not deducted, that we need to deduct it and make it an NPA. I will not make a categorical statement like that, because there are, in certain cases, it is clearly mentioned in the sanction terms that the paid stock or the creditors are capped at a certain amount and not at the actuals, not at the balance sheet numbers, but they will say creditors up to so much needs to be reckoned for the purpose of, so it's called frozen DP sometimes. We see that many a times, particularly educational institutions and all that, because many of these receivables are from students, and also a certain amount, while sanctioning it is assessed and capped. Okay, up to 5 crore creditors needs to be needs to be reduced, but beyond that you don't need to reduce that, because there are some deposits taken and all of that from students for building auditoriums. Many of these things are there. So schools, colleges and all that, sometimes they collect some amounts in advance which are so a frozen DP concept is maintained for some of these cases. So such cases fine. But where that is not mentioned and where the sanction term is silent, how can they take a view that creditors need not? So debtors taken, inventory taken, creditors not reduced. They say creditors need not be reduced. MPBF method and all that, but that's not done. Irrespective of the method being followed, if you are including, it's very clear. If I'm saying wherever the sanction terms are silent, if the sanction terms are clearly highlighting on this matter, then I rest my case there. But this is something you need to look at. In many cases, you will see that creditors are not, because the client, the borrower gives us stock and debt statement. DP is computed based on stock and debt statement. They don't even tell you what their creditors are. Quarterly, what is the figure? December, March, okay, financials will be there, but even March, by the time we audit it, we are getting only last March. We are not getting this March financials when we go for the audit this time. So stock and debt statement is there. What about creditors? No, that they have not given. And how can you not give that? Go get it. Then when we get that and when we look at that, and then we understand that sometimes creditors are either understated or creditors are not considered. So always insist that whenever, and many a time you will see that in the statements given by them or the stock audit done by our fellow professional, they have mentioned what the stock figure, what the creditors figures are, but not considered for DP. They will say for years we have been doing it. Then sometimes to our juniors, they will get aggressive also. Some of them do that. This is how it has been for the last 10, 15 years. You are a youngster. You're doing it for the first time. You don't know any of this. Because you don't know, you cannot come and talk to us like that. All the usual, thing that happens will happen. So these are all things we have to handle with maturity. And because sometimes they may not even know. They may be right. That's probably how it's been done for 10 years. So they may be right. They have just been following it. It may be done with a genuine intent, but nevertheless, a mistake is a mistake. So find it, correct it. Now, this is the case where the balance in the account, again, DP issue is almost 1.5 crores, whereas audited balance sheet 50 lakhs. So today we have access to that. When you go for the audit of Q3 or Q2 or Q3, we know it should be somewhere near. If it is only 1/3, then there is a problem. Understand that. So we must always make it a point, whether it is there in the Caro report or whether it may be a partnership firm or a sole proprietor and all that. Nevertheless, at least the year prior, now when we go, we should insist on seeing the 31,322 accounts. And when we see that, please compare what was given last March vis-a-vis that number. And if there is a huge variance, that means that same variance or a similar variance exists even today. It's a very simple conclusion there. We cannot ignore that there is some problem in the way in which it is taken, genuine or otherwise, is the next question. But if it is a large account, we must insist on a inspection being done. Get that done either by the bank if you trust them, or by an independent person, or by our own team if you want to. And sometimes you will see that bank itself would have done it, and when they go there, it is excess and all that. These are things which are seen. So insist on these. We have to protect our case, and we have to protect our interests here. Moving on, I think I'm running out of time soon, so I'll look at some of the other aspects also. Agricultural advance, again, very, very risky. And most of the time, the quantum is so less that individually it may not fall within our materiality radar. This is the same with agriculture, education, housing. Let me talk about these three together. So it's an area of grave concern, because if there is a problem, then the whole, large chunk of it becomes an NPA in one shot. Now, what are the problems? Assessment of crop, proper utilization of the funds, existence of the borrower per se, the mechanism for monitoring, the mechanism for appraisal, everything, because it is impossible. Loans may be 5,000, 10,000, 15,000. And agricultural advance also, one step further, we may have to at least a few cases. If there are larger cases, we need to look at this, whether these are actually agriculture, or is it just to avail of a better rate or better terms or a longer period of repayment. Are they classifying it under this? We've seen tractors given, we've seen vehicles given, something which they can in some way connect to agriculture. You can connect everything to agriculture. Now that way, if you look at it, a large 10,000 square feet bungalow built by the Jamindari, you can say it is part of agricultural advance. It is built there. It is built so that he can sit there and monitor it from his home. So it's a 3-story. We've seen that large mansion being built, being treated as agricultural advance, and then they actually trying to argue with us, saying that this is only for part of their the whole business of agriculture and all that. These kind of theories will come, but larger advances, at least there is a trigger. But smaller ones, we need to understand the way in which it is given, particularly the definition of crop season. We've seen certain times where certain crops are given these, and those crops cannot even grow in those areas. Crops which will grow only in highland and in high range areas are sometimes given in barren land. Crops which will grow only in the lower terrains are given by the branches sitting in Guwahati or the Assam area and all that, where because they're used to giving a lot for certain sectors, but they have also given some other sectors there which it is impossible to have that cultivation there. So these things happen. So as a cluster, we must have an audit mechanism to review these agricultural advances, because a large quantum of diversion happens. We must understand that diversion happens from this. Some of the examples, there are very many, it's not possible to list, but the proceeds being routed through an account, borrowers not remitting accounts in the account depending on the crop produce. I spoke about that. Loans not used for the purpose for which they were granted, proper inspection not carried out, no field visit, nothing for years on end. Loans granted for purchase of land wrongly classified. I've just very diplomatically written wrongly classified and all that. Many a time it may actually be genuinely, knowingly classified also would be there. Now this is another item, but before that, let me also say, see, we must also understand that if one account of a borrower is an NPA, then all accounts are NPA. I think we must understand that. So sometimes there is a thin line, because for the same person, there will be a loan in the individual capacity and also in the capacity of a sole proprietor. which may have a name. So if you look at the books, it will be a different entity, but a sole proprietor. And the same person has, so the same person may have one account in his name or her name and a dozen other accounts which are sole proprietorships in different names. So if you classify one, you must classify all. Now, how do you know? Normally, they would have used the same base document, either a PAN or an Aadhaar. So all of these using a system software, and you can use Excel or you can use IDEA or any CAD tool. You can try and pick up using the data, sort and pivot it and compile it together and all that. Sort your data and find out parties concerned wherein one borrower. So every time you classify, particularly when you see accounts like agriculture and all that, you will see there may be 100 accounts given to the same person, but all in different names. Because many a time there are a lot of issues, Land Ceiling Act and all that. To circumvent that, there will be different reasons. They may not have taken it because of NPA angle and all that. They would have taken it in different names for different reasons. But it will all get clustered under one bracket, and all those accounts will have to be classified if you make one account an NPA. Now moving on to pre-shipment, post-shipment, these are all, again, I said this in the earlier slide, very dangerous documents. This I will also club when I speak about this. With this, I will also talk about unfunded also, because many of these things are sitting outside the books. Many of these instruments are, and different banks, you will see different instruments. Pre-shipment, post-shipment, unfunded and all that, sometimes you will see it in different names. Not that the same name may not be used. So it may be new to you, new place. You will have to go and figure out by asking the right questions to find out, are there any amounts due to the bank sitting outside the trial balance and outside the financials? And there will be for sure, especially wherever there are exports and bills and all that. There will be amounts due which are sitting where entry is not there, where it is monitored sometimes through large manual registers and all that. We still see in many banks these facilities are monitored where the date 90th day, then somebody will just strike it off with a pen. It will be in red. If it is in green, it means it's been rolled over for 90 more days. If it's in red, it means that it is become NPA. I mean, it's closed or whatever. Different banks, different. But understand these documents, understand what these things are. And just some examples, again, fresh packing credit facilities disbursed so that, to regularize temporary OD regularization. So new facility, which sometimes may sit outside the book, given through the money, closing the, OD or regularizing a CC and all that. So go through these things. How a packing credit loan works in one bank may be different from how it works in another. So understand how that instrument works. Sometimes some of these new gen banks are also funding very innovative, items are being funded. We may not understand common parlance. We don't really understand crypto. We don't fully. Some of you here may possibly, but most of us probably just have a peripheral idea. But if some funding is done for instruments you don't or some other derivatives or forwards and futures and options and all that, many of these things are funded by some of these banks, new gen banks and otherwise. So we need to understand what these are and have a clarity on the realizability of it, and we must take an effort to understand what these instruments are if it is there in the branch that we are auditing. Now comes a very important area, which is on restructuring of advances. Very dangerous. Let's say very dangerous area from an audit perspective. I'm not saying restructuring is dangerous. I'm saying from an audit perspective, we need to understand clearly, especially if the restructuring has happened during the period that we are auditing, then the entire responsibility of seeing whether the compliance with the relevant circulars are there have been done. The restructuring is done as per earlier circulars. Large number of circulars have come. If you look at it over the last 4 or 5 years, multiple, and in multiple states, there are state-specific circulars which would have come. In Kerala, for instance, there were floods back to back. So there is a flood restructuring which is permitted by RBI. There is an MSME restructuring which has been permitted by RBI. There is COVID 1.0, there is COVID 2.0. So a lot of these accounts are sitting in the deep freezer as restructured advance. We saw what happened when Raghuram Rajan came in mid 2015-16 time. The whole asset quality review, many of us had the opportunity to audit banks at that point in time. We were the central auditors of SBI at that point in time, and it was a massive activity happening where this AQR procedure itself was different. It was not like the regular NPA review. They had a very different approach. If an account is bad in one bank, then you have to classify it elsewhere. It was a limited period during which they went through that AQR, but thousands of crores across the banking system had to be which they had themselves given. These are all cases. It is not that auditors were sitting on it. It is because RBI had given a dispensation. If RBI says that Videocon need not be classified as NPA and gives a special dispensation, then we don't have an authority to classify. So if that RBI dispensation is taken out or disbanded, then obviously it becomes NPA. So similarly, thousands of crores, Bhushan Steel, NSR, and so many large accounts got classified as a result of. So what they basically did is they just picked on restructured advances which would not have seen the light of day, and removed all those dispensations. It all had to be classified. But now we are again back to a regime where over the last 4 or 5 years, large chunk is sitting in restructured advances. So we have a responsibility there to at least ensure the compliance. There may be accounts which we have discomfort in. As an auditor, I know, and I'm sure many of us sitting here, we know that certain accounts are not healthy or are not good. We can certainly continue to include those in our stressed account list and make presentations in the board. But we may not be able to classify it as NPA simply because RBI has given specific dispensation for it. So we have to respect that and abide by that. These are some of the circulars. See, as I told you earlier, some of the circulars, the first five are, within the resolution framework, 19, 20, 21, 21, then the whole FAQ and all that. Last one is, talking about other things also, includes restructuring also. I'll speak only about the last one because all the other five are, most of the accounts which are there in the other five have come to a more or less a logical close by now. The term, the deep freezer time for it and moratorium time for it is more or less over. So these have either been are being recovered or would have been classified by the time we do the audit. But there are still a few which are which may probably come, but still only few. So doesn't warrant my having to go through. Last year, when I made a similar presentation last year, lot of time was spent, substantial amount of time was spent discussing each of these circulars because the impact was so huge on the March 22 numbers of impact of these circulars. But today, most of these are resolved, and thankfully, there hasn't been a code 3.0 which has come. There is a lot of push from industry for another restructuring package, but doesn't look like the government is going to do that. So as an auditor, we have comfort that, okay, at least these accounts are more or less resolved, the first five. But now looking at the November circular, read with the the clarification which has come in November 21, read with February 22. There were a lot of loose ends last time because we hadn't done an audit based on the new circulars. But now that it is done, and now that the time given by RBI to the banks to comply with it is also now, by now the 12-month period is done. So it is expected that all banks now comply with it. Yeah. It has made our life easier because there was a lot of discussion and a lot of discretion which the management could take for certain views which they would argue on, where we had discomfort. But nevertheless, because there is an alternate view, we have spent a lot of time discussing on a lot of things, but many of those have been removed, and as a result of these circulars, and I'll take you through some of the observations where some clarity has come, which was always debatable earlier. Now, this is something which will, as auditors, give us the strength, because specific due date and repayment dates are mandatory now. Earlier, there were many cases where these things were just open. It was just open. Due date and all that, it is left to infinity. But now for every borrower and for every facility, everything needs to be mentioned. So the due dates for repayments, which were earlier not specifically mentioned, Henceforth, the exact due date for repayment of a loan, frequency of repayment, breakup between principal and interest, everything has to be there in the loan agreement. So last year, 22, when we audited, they said that we can do this only at the time of renewal. Whenever it comes up for renewal, we will do it, and RBI permitted that, and we have accepted that. But now, when we look at it, all these would have been removed. Now, have they corrected this? Will have to be something that we have to look at. So it's very clear now. So when an account has to be repaid, and accordingly makes our job easier as to whether it is an SMA1, SMA2, or whether it is an NPA and all that. It's now very clear. They cannot argue otherwise. Yeah. And equally important that the borrower should also be told. That's also needs to be told. Many a time borrowers also don't know. They think that once you take a loan, it is forever. There is no repayment due date. It goes on forever. It's been the understanding thus far. But now it's not just important that the bank records it. Borrower also should be told, and any changes to that also, it should be documented that the borrower is aware. They cannot say that I did not know. Now, classification as SMA and NPA is, again, it has become much tighter now. That the whole overdue principle, the whole out of order principle, everything has now been streamlined in line with we would only talk about, prudential norms and NPA at all our audits. Now, equally important is for us, probably more important for us to talk about SMA accounts, special mention accounts, because these are the ones which would otherwise be called probable NPAs. Now we don't need to worry about probable NPAs because some banks had a mechanism to identify probable NPAs, but many banks didn't. And because that wasn't mandatory, they could get away with it. But now, very clear, SMA definition is clear, classification into those buckets clear, needs to be disclosed, everything clear. So to that extent, how it is identified is also very clear. There is a day-end process, and from the day-end process, it needs to be tagged. 90th day from the original day, from the day end. Every day, banks have a day-end process. 90th day, if it is 30th September, then 90th day is not 31st December, but it will be 29th December. Is something where the 90-day flagging is now day-wise has to be done, which also makes our life easier, because that was another argument they would take, that we will reckon NPA only at the end of a quarter and all that. Now, that logic is also no longer existing. And out of order, again, in line with that, 90 days and all that, definition of out of order obviously has to be, corrected in line with, I already spoke about this 90-day things. I'm not reading that slide out. And accordingly, the, clarifications and changes were put in place from March 31st. And now the upgraded accounts also. This is something which is interesting. There was always an argument, by the bank saying that an account became an NPA or went into the whole out of order status because interest was not serviced. So if interest is serviced, you should allow us to upgrade. How unfair is it that because interest is not serviced, it becomes NPA? They are servicing the interest 2 days later, you upgrade it. No, it is no longer permitted. There is no more doubt on that, no ambiguity in that regard. A loan account can be upgraded only if entire areas of interest and principal are repaid. Only then can it be upgraded. Clarity on that is also come. And income recognition, obviously, in line with that. When we speak about it, the income recognition also follows interest how it is to be reckoned. So this is regarding the new circular. And my final segment, I'll just talk about some of the concerns which are very, very important and very, very critical. The dependence of the branch. Why is it that these problems are happening? What are the concerns, both for the bank as well as, because today the situation has changed. Bank management is also very, very scared. Independent directors are really scared. They're worried because any problem that comes up, they are taking the almost equal responsibility as the whole-time directors or the CEO of the bank. So every independent director is spending substantial amount of time with all the major banks. They have probably more than one board meeting every month, and all these things are discussed. And audits have also become more proactive, and expectations are also substantial from us. So the concerns are sometimes at the branch level, over dependence. So manager has a problem with that. if the key borrower is landing in some problem and needs some short-term funds and all that, sometimes they know that it will not get sanctioned by the HO, so then they will somehow manage it. Borrower entity disputes, persisting comments in any of these audit, insufficient operation in account, continuous exceeding, check return, rollover and extension. This rollover is again very dangerous. Once you understand, okay, there is some issue, some problem, COVID, all that, you get all the explanation. But frequent rollovers, red flag. Understand that. And large frauds and continuing frauds. As we speak, there are hundreds of frauds which are happening, and it's not going to be easy for us as auditors. We'll have to wear the forensic hat for us to actually unearth the quantum of it. But I'm sure as part of audit, we may be able to sniff it, if not actually quantify it and get to the root of it. But we should be able to, our team should be so equipped that if there is an issue, we should be able to at least understand, and from an audit perspective, we must ensure that we are insulated from the risk of negligence there. Greening or unhealthy account, housing loan I spoke about, sector wise, sometimes in certain states, it's a complete problem. Housing loans given when there are natural calamities, flood and the landslides and all that, one segment. And then areas where there are the whole real estate sector itself sometimes is stressed. So housing loans given in those areas. Education loans given for certain, it may not have turned NPA, but let's say students who are studying in Ukraine, phenomenal amount of money is funded by the banks. Now what happens? And it's not being repaid. So that's something that needs to be discussed. Individually, maybe small amounts, but when you quantify it as a bank as a whole, it will be a fairly large amount. The Russia-Ukraine impact of education loans is material for many of the banks. Stress sectors. Bullet loan, again, very interesting thing that we see. This bullet loan is usually a unsecured loan with a fixed tenure. So in order to tide over a problem, large amount bullet loan given 60-day, 90-day could be huge. We have seen 300 crore, 400 crore bullet loans being given, unsecured. And otherwise seemingly good companies are given these bullet loans. Bullet loans are normally given only for where the ratings are good and all that. But then what happens? Suddenly a DHFL situation happens, or an ILFS situation happens, and what happens? Gone. And since it's unsecured, it's a direct write-off, the whole amount. There is no room for even any kind of security or substandard. Normally the substandard, you need not reckon security. You need to start looking at security shortfall only once it goes to D1 is the way the norms are prescribed. But here there is no room for any security shortfall, and the whole thing goes into the 100% provisioning. Restructured loans, we spoke about it. Lack of transparency of information. As far as auditors, this is a problem. They are not wanting to tell us. In fact, they just want to get rid of us. At the junior level, sometimes they will be, some of them will be bullying. At the senior level, they will say that you don't know, you have not understood. At the senior level, they will be extra sweet. They just want to take us out. They want us. They want to take us to the nearest temple and church and pilgrimage, or to the beaches, or instead of us sitting in the audit room and working, they will identify the day the partner is coming, 2 days partner is there, they will drop the itinerary, of which only 1 hour they will say, just before you go, sir, we'll keep all papers ready, you can just come to the branch and sign. But before that, you go and when will you next come to all these places? And all 7-star facility will be arranged for us in these places, and best of cars and everything will be taken care of, simply because they're not too happy with us spending time in the branch. So transparency is a problem. Prima facie unacceptable explanations, justifying end use without verification, prolonged absence, no field visit, stock audit, and all that. Technical regularization. We spoke about technical regularization of subsequently done evergreening and all that. And to the technology side of it, as I said, entire few hours would be required to really discuss how technology needs to be used. And most of the time, something, a tool. Now institute has also come up with tools, and I think it's time we also started, while Excel is a great tool, and while that is something we need to certainly use to the hilt. As I said earlier, you can use Excel in very many ways. But the point here is that it's about time we also transition to using a tool. ECAT kind of tools, lot of CAT tools. ICAI is giving very low cost and free, and very many versions. They are doing everything they can to support us, but we are sometimes not utilizing what is given to us. So please try and get hold of one of the tools which will help you sort data better, and which will help you actually come out with the reports. A lot of issues can be found if we are effectively using these tools. Just to give you a few examples, we can get the list. Once we get a data dump into our system and use the tools, we can get the list of SMA accounts, probable accounts, the restructured account performances, the exposures in the sector, anything given above. Because you can set various parameters in these tools. So any deviation any standard deviation or mean that you may set, anything that goes outside of that, you're able to get hold of the report. The data will come to you once you have that. Or cases where the security is not being updated in the system. So many cases. So for how long has it not been updated? The report will throw. For NPA accounts, security shortfall has to be provided for. But sometimes you see for 3-4 years it's the same security. No security evaluation done, no security verification done. And for other regular accounts, CC accounts and all of that, DP is just one figure is put in the system, one large number is put in the system. I've seen a case where 10 crore is the outstanding balance, DP is showing 140 crore, and it's been there from day one. It is some typing mistake. It should have been 14 crore or whatever, but it's just put as some number and it's just there. So nobody's applied their mind on it beyond that. So these are the kind of things which technology will help you throw out. The discrepancies, will throw out the deviations there also. And finally, we come to our report. What are the things? We spoke about planning, we spoke about documentation, we spoke about review of large advances. And as an auditor, finally, what is our responsibility, and what is it that, what is our end product is our report. We have the branch audit report, we have the tax audit report, and we have the LFAR. Now, certain things you should know what finds its place where. Tax audit is clear. We know that, everything connected to the relevant clauses. So let's keep that aside. LFAR is a control questionnaire. So whatever requires to be reported from the control perspective, the questions are there, need to be answered, and not just yes, no, not applicable. Wherever detailed comments are required, please give an annexure to the LFAR. And in the annexure to LFAR also, if there are some major observations of control weaknesses, please bring it once again, repeat it again in your annexure to audit report. The audit report also, you must give an annexure which talks about some of the major observations about the branch. It's something where it's an opportunity for us to contribute also. Why is it that the management says that branch auditors are not contributing, or branch audit reports are not having any value? It's also because it is an opportunity for us to also give our suggestions. Sometimes they are very valid suggestions. We've seen that one auditor wrote all about the housekeeping of that branch, where it is located, how they has to walk through a small little tunnel like thing and sit there, and the ceiling was almost about to fall down, and with detailed note was written about the physical infrastructure of the branch. That went all the way to the board, and then quick time decided to shift it to another better location, and that was really good. So these are all opportunities for us, or even from a better practice that you have seen somewhere else. You want to report about it in the branch report or in the LFAR. These are all spaces for auditors to convey their thoughts, and all these, because there is another document now at the head office. There is a consolidated LFAR which is given at the head office level. So any good suggestion made by a branch auditor will find a place there, simply because at the HO, the consolidating central auditor is struggling for good points to put in the LFAR, because most of these reports have nothing in it. So any good observation which has some kind of a valid, what do I say, something which has some degree of an impact on the bank in some way. It needn't be on the advances side alone or the profitability side alone, but from a much broader perspective also, if there is something which will help the bank, there's absolutely, I'm sure it will be appreciated by the consolidating of auditor if you write that, and it will be appreciated by the board if it actually is finally read by them. So improve. What are the suggestions we can write on improving quality of appraisal? CIBIL, do not compromise the sanction terms. If they are vague and cryptic and all that, you can say it requires improvement. We can talk about growth. You can talk about risk. We can talk about business development in that area, in a specific area. Probably a sector is growing very well, but if this particular branch is not having any business, there nothing wrong. You can always say that there are large accounts in this area. Bank can look into these areas, and also possibility of quick mortality and identifying and reporting on stress. Very important. Stressed account and quick mortality, if it is happening, has to be highlighted. So these are important. And the emphasis on recovery, and on the monitoring side, we spoke about it, a very, very important area. We need to write that anything that you see connected to monitoring, there are persisting comments in the concurrent audit. Sometimes these concurrent audit reports are sometimes not taken seriously enough. Some of them do a really solid job, let me tell you. So let us respect the work done most of the time by a fellow professional. They are sitting month on month, day on day. Sometimes they do 24/7, 365 days. There are concurrent auditors who are sitting, and sometimes they tell us, we've done so much of work, so many observations, but nobody is even seeing it. So it's a good thing if the critical points are taken from there, and because whatever you write here will find a place in the final affair. So it's good that such observations are also escalated to the highest level. Check return, devolvement, we spoke about all that. And finally, what is my conclusion here? It's simple. I'm sure all of us agree. We need to train our people well. We need to be trained. We need to be up to date, and we need to train our people. That especially youngsters are coming in, a lot of young blood with a lot of enthusiasm, far more technologically advanced than us. So we need to use them well, have proper structures, have proper methodology in place whereby we are actually improving or learning from them, taking the best practices from them, and incorporating it here. Redesign processes, adopt audit processes to match. Branch auditors must maintain independence, obviously, analytical skills, using tools, logical thinking, and everything else. Discussion also, discussion platforms like this, and with our own fellow professionals, joining in study circle, closer group meetings where we actually 10, 12 of us sit together and discuss issues. Those are the meetings are the best kind, because a lot of ideas come in and a lot of suggestions come in. So always never underestimate the importance of small study groups. And finally, that's it from my side. Just to recap: audit planning, documentation, practical issues, recent circulars, concerns, and the use of technology. This is broadly my premise for the discussion here, and I think within the time allotted to me, I've covered that, and I'll be happy if we can have some discussions on some of the other aspects, the pure technology side, from how a CAD tool should be used, or how Excel can be used better. As I said, requires would ideally should be done in a classroom space, but from an online session space, I said that earlier. Let me repeat once again. There are two very good sessions by a fellow professional called Sharan Kumar available in the SIRC YouTube channel. I think it's about 4 or 5 hours of I've been using that for my training for my own team. So please note that down. You will see that, and I think it was handled last year around the bank audits. Season time. He handled it very well, structured how each column, what can be moved, how it can be pivoted, how it can, because there's a lot of tech involved in that. And while I'm speaking, if I open Excel now, then all of you will have to open your Excel now. And then, doing that with this is really not, if I was there in person, it would have been effective. So I thought I will do my justice to the topics on advances, documentation, and planning. And Excel, I will, leave it, or probably I can come back another time and, do a hands-on kind of, that kind of a session. I'll be happy to come there and do that. I think with these words, I'll I'll stop my sharing and probably take some questions from some of you, or just give me a minute. I'll just refill my water and just give me a minute. Yeah, I'm sorry. I think I'll hand it over back to the host if there's anything more to be added. Fortunately, I'm not able to access the Q&A side of it. For some reason, the chat is not showing up here. So I think if there's anything, I'll just share my mail ID. You can feel free to connect vivekgovind@varmanvarma.com. On my mobile number also, I think I've shared in the last slide. So I'll hand the session back to the host if you're there.
Thank you for the session in behalf of SIRC of ICAI.
Thank you very much, and feel free to connect. As I said, my number and my slide. Maybe I'll just keep it open for one more minute in case somebody wants to. Yeah, that's the contact. vivekgovind@varmanvarma.com, and cell phone in case I'm not picking up your call. I'll certainly come back to you. You can leave a text or with your query, and one-to-one we can. I'd like to stay connected with those of you who feel the need to. Thank you very much once again. Thank you for the opportunity, and I look forward to being in touch and hopefully a physical session sometime soon. Thank you.